Yo, what's up? It's your boy Kerry from the Trading Blog. I'm gonna go ahead and break down dividends today. I got a lot of questions lately about what's dividends, and people are getting into some dividend stocks. They didn't really understand what it is, so I'm gonna break it down for you because it's really simple. Now, first, you understand a dividend is basically kind of like a thank you or kind of like a give back the company gives you for owning share in that stock. So the better the company does, the more 9 times out of 10 you're gonna get more back because their revenue is getting better. Now, the thing you understand is you get a dividend share per share. So if you own 2 shares, you get 2 dividend shares. So it works like that. So it's not just 1 dividend share for all your shares, it's per one. So now let's break it down. So let's say you have a share, and that share costs $20, right? The dividend they give out is $1. So now they're gonna give that dollar out and break it up. Sometimes they'll break it up in 4, that's the most common because they do it by the quarterly reports. Some companies do it by 10, some 8, some each month. So you just gotta look it up, do your research, find out which one does what and what best suits you, right? So they're gonna get a quarter for each dividend stock. 4 times a year, 4 goes in $1, boom. That's simple. Now again, you gotta do your research and see how much your dividend stock's worth, right? Now, how do we find the dividend yield? Now the dividend yield, it sounds crazy, it's a percentage, you think it's all crazy math, really simple. So what you do is you take the dividend price, right, so it'll be $1, and the share price, right? So you divide the dividend price by the share price. So with our hypothetical situation, you have $1 over 20. When you divide that, you get 0.05. Now, if we get into percentages, we times that by 100, what we get is 0.5%. So it has a 0.5 yield percentage. So that's how you can understand companies more likely. Now, let's look at some companies over here. We see Apple gives out 82 cents per share, right? But that's only 0.65% of their yield share. Walmart, $2.2. So $2.20 per share. But their yield percentage, 1.62%. Now McDonald's, the highest of them all, 5.16, with a yield percentage of 2.35. Now, this is all at the time. They all go up and down. You give it to the reports. Now, I gotta put this warning out. Just because a company gives out great dividend prices doesn't mean you just gotta go invest in them and go take it and you gotta go get them immediately. No, do your research. Find out what they do. It's Ross right here. Do your research. You never know what a company's got going on until you find out. So yeah, they might give out great dividend prices, but they may be in debt. So please do your research. Find out what works best for you. Secondly, dividends is not a get-rich-quick scheme. It's about investing. Now you can take that dividends and reinvest it to the company or reinvest it somewhere else, or take that money and use it for your own personal use. But dividend investing is investment. It's not a get-rich-quick scheme. So go ahead and use it to your advantage. That's a quick dividend breakdown.